All right, so how should we interpret this big rebound? Not huge rebound. We didn't recover all the losses, but a 1.5% move to the upside on oil just off a social media post and some comments is pretty significant. Does that mean that investors now don't believe that tensions are going to ramp up and they just simply don't believe we're going to see that 100% increase to tariffs?
I do think both sides tried to de-escalate the situation over the weekend, so I do think there'll be some calm prevailing, and that's why you've seen the rebound. But and our view absolutely remains that both sides are actually looking to keep tariffs at current levels, which is about 53%, rather than escalate it all the way to 100%, right? I think, and that's kind of where the market sentiment is as well. But I do think overall macro sentiment has deteriorated. We've seen a flight away from safe haven assets. We've seen gold and silver rally. So the macro backdrop isn't particularly conducive for risk appetite. But I, however, do feel that the big reaction we saw on Friday, some of the worst news is probably not going to occur anymore. And that's why the markets reacted the way it is.
All right. Obviously, some of the concerns on Friday were about a slowdown in the global economy. The U.S. and China are the world's two biggest economies. You also note that China has done a lot of stockpiling in their strategic petroleum reserve. How do those dynamics all play out? The idea of increased tensions and China having some significant stockpile.
So the Chinese stockpiling has been one of the most important features of the oil market this year because a lot of traders and analysts have come into this year expecting these big stock builds. Yes, stocks have built. Firstly, it's been in line with seasonal averages. It hasn't been out of the ordinary, but basically 90% of that has actually gone into Chinese tanks. And that's why the physical market actually has remained very tight. If you look at Cushing stocks are very low and pretty much near record low levels. All other pricing centers are tight. And I think that's been the most critical kind of feature. And the stockpiling, by the way, isn't just about oil. They're stockpiling pretty much every commodity. And this is a much bigger issue. This is about de-dollarization. It's about potentially, if the trade war were to accelerate, they'd have to devalue the yuan, in which case imports get more expensive. So the objective for the stockpiling is much wider than the oil market itself.
All right. So bigger issues at play here. So I think the bottom line for a lot of investors, what they want to figure out is, for the oil market in particular, does it matter who has the upper hand in these U.S.-China trade talks? Does it matter if the U.S. comes out on top? Does it matter if China comes on top? Or is just the simple fact that there is an agreement that allows the economy and global growth to continue?
I think it's the latter, right? As long as there is some form of resolution. Tariffs are already in place, but you know what? Global economy is kind of held up okay. Oil demand growth is about, it's under 1 million barrels per day of growth, but about 800, 900,000 barrels per day. That's fine. If things were to get worse from here, that's when the concerns about demand growth creep in, because again, demand growth is less than 1 million. And I think the concern is, remember at the peak of this, around kind of April, May, we were talking about potentially 500,000 barrels per day of demand growth, if not less. And those are the concerns that I think initially drove that knee-jerk reaction on Friday. But at least now some of the worst fears have at least gone away.